Hello, think this should be coming online now. I am hoping. Start the recording. Um, Checking if we're live. Yep, alrighty, we are live. I'm hoping. Just click on this new link to see if you are with me, and so I can see the live chat. Yes, we're here. 2 watching. It's a shame. We had about 7 or 8 before on the other one. Well, I might just be doing a live stream for Cal and Jack by the looks of it. Whatever. Be alive. Oh, I might just wait a couple more minutes just because there's 6 here now. I think that's Tom. You asked on Kadena. I'll get Kadena up soon. Um, but in any case, we'll get started because it's already 6:05 and I won't keep anyone waiting. I will briefly look at a couple of charts on a high time frame, which I haven't even been bothering to kind of look at the moment, particularly with the DXY. Of course, for those that don't have a full understanding of the DXY, it's essentially a basket of currencies against the USD. It's obviously a metric or a forex to understand what the USD is doing in both demand and supply terms, i.e. its price, and why the USD or why the dollar index or DXY is important is not to just understand in a literal sense what's happening macroeconomically, but it has an inverse correlation with commodity markets, particularly stock markets and Bitcoin, and that usually when the DXY goes up, that commodities will come down. So for those that have been here or have a general understanding of the Bitcoin chart, obviously you know that early 2021, from May all the way to kind of November of 2021, sorry, so kind of this point here, I think the 8th of November was the market top, or maybe it was the 11th. I can't actually remember, but anyways, you can pretty much see it, right? So crypto stocks, they make all-time highs by November 2021. They trade all the way down to the bottom of, where was it? Here. This was kind of the bottom of those markets here. And then kind of ever since, there's been this weird macroeconomic tale where the kind of economies have been fighting the inevitable, which will be a recession, but have been to and from where uh, definitions are being changed of what a recession is. You know, the US is seeing global growth in GDP, but the inflation isn't tamed, and there's different job data that comes in. G'day Willie K454. Um, but in any case, locally, kind of what we're seeing on the DXY is on a high time frame. It doesn't make sense to me too much, the DXY, because technically it looks bullish, and by bullish I mean that it should be going up. It's kind of broken its structure where it's now putting in, you know, high high, high low, high high, high low. If it goes to put this higher high up in, then really it can keep going. But fundamentally, you know, if the US are to cut rates come end of the year, which they're expected to do in December, then the dollar's going to lose a lot of its standing and demand that it received from the high interest rates, you know, in this dumping here. And we may see a shift in structure where these markets come year end that coincide with elections. If Trump gets elected, then my idea is that the DXY dies, stock markets go for a blow off top, and as does crypto and Bitcoin. So something to keep in mind of. I've mentioned a few times now that as a macro event, the election is a risk off event for me. It might very much sell the news, but we'll have to wait and see what happens. But definitely something to keep in mind. So I thought I'd quickly just look at the DXY for you in a literal sense and explain it audibly. And then seeing how, you know, even if you go on a daily structure, remember how I was telling you, so from, you know, even from going from, you know, May 2021, you know, we just continued the rise and, sorry, the fall on the DXY, and then obviously, you know, you can see the raise in crypto And then it hasn't really made much sense in kind of the last 12 months where commodity markets and stock markets just gone against the DXY. But in any case, a lot of the frustration that currently happens, uh, this was the top of the altcoin market here. So what happened was, all commodity markets, stock markets dumped, but the Nasdaq and S&P 500 have gone on to put in new all-time highs and begin consolidating up here, whereas crypto from this point just kept ranging, and we didn't go and make new all-time highs on any altcoins or any Bitcoin chart. So I guess that's kind of been the frustrating thing. I think particularly from an investor that looks at all markets, that's been the thing that's kind of a hard pill to swallow, is kind of trying to align the macro with the cyclical effect of crypto. I guess, as a trader and investor, it's really ignorant of me to be completely blind to macro, the DXY, stock markets. For those that have been here a while, I've spoken so much about how the correlation coefficient between the S&P 500 and Nasdaq with Bitcoin was in 2021, 2022. Began to taper a lot off in 2023, but that's been the kind of hard pill to swallow, or the thing to digest. Well, okay, well, if the stock markets are forever pumping and PCE data comes out like this, and they're looking at cutting rates come December, and you're seeing stock markets make ath after ath, and you're seeing Bitcoin just range, well, then you don't really understand what's happening, and then you kind of turn to the cyclical matter, and you go, oh, okay, well, 60 to 90 days after every single halving that's ever happened, there's been stale price action with crab-like volume, altcoins have traded down, so it makes sense. Um, so it's a lot to juggle, because you're trying to juggle two kind of different narratives that are shaping the price of Bitcoin, none of which can be compared. And then you might say, well, if it cyclically does that and it's happening again, why don't you just follow the cyclical nature? Well, if I followed the cyclical nature of Bitcoin, I would have sold all of my Bitcoin at 48k, knowing that about a 30 to 50% crash would happen to the low 30s or lower. And if you remember back then, I did have that cyclical idea. If you remember, we did reject from a 618 golden pocket that was derived at the ETF approval, and we traded from 48k down to 38k. In any other cycle, that would have been a 50% drop, or 30 to 50% drop, which we didn't get. And you've almost noticed how every pullback has been kind of nullified by the fact that we've had such good inflows from these ETFs, which has kind of changed the game. So just to kind of summarize, it's a lot to stomach. You've got to be able to stomach interest rates, inflation, US government, worldwide governments, the macro scale of everything, whilst also trying to factor in the cyclical nature of Bitcoin and crypto. So it's all up in the air right now, but I think we're making good tracks. I will look at Bitcoin and ETH quickly. We'll just take a look at the daily range. We are seeing a bit of a sell-off currently to the mid 62Ks. I won't get up the order flow and look at things too locally. I will just kind of get the range up for us. So range support and resistance. We'll quickly look at this one first. So as noted in last live streams, or kind of in the weeks before, if you'd been following my technical analysis, I had a big trade idea on Bitcoin, and I essentially said, this is our last stand, at least for the time being, on a short term. Locally, we're either going to bounce from taking out this daily candle impulse low that represented, this kind of new range, didn't it? And we're either going to come back, take the liquidity under it, and then break trend and, reclaim the POC and head to new all-time highs, or I pretty much said we're kind of stuffed. Sorry, I almost used the F word. I won't use any French on here for my audience, but I expected to break trend and whatnot, but obviously I said, this is last stand for us. If we lose this level, we're going much, much lower. And you can see pretty much it took 2 days to go from, well, really we traded down to low 63Ks. We had the val there for support. In one daily candle, we went from 63K all the way down to 58K before finding that 60 to 62K demand. This was obviously a long cascade, and what's a long cascade? I mean, people just market sold into long liquidations, and as every liquidation after liquidation happened, what is a liquidation in a long? It's selling back in. So really it creates a situation. That's what a long cascade is it just amplifies the selling that isn't there, because people are forced to close their longs or they're getting liquidated on them, and thus this is actually creating more selling in the market that isn't needed or wanted. And then of course on the contrary, the contrary happens on a short squeeze, right? Having to buy futures contracts to close the short to buy a long, so buying just gets fueled. But in any case, we've caught this 60 to 62K demand. I will just show the daily range here to show that we're currently rejecting from the val, which isn't great. I just showed what happened when we lost that support. And you can see kind of horizontally, we've got a couple of wicks here. It's a pretty important level. Like we rejected, 4 different times as resistance to that val prior when we dipped down to, the 60k level. Could be we're trying to do the same here. Could be a rejection. As I've said, I'm kind of low time frame neutral at the moment. Lower wouldn't surprise me. Higher wouldn't surprise me. I think it's a bit of a guessing game right now, but you can definitely take notice of how clean this rejection is. We've obviously opened the daily candle right on the range val after wicking through in another short squeeze, and then we've come under and we've rejected. We've tried to reclaim it today and we've rejected it again. So I'll be watching this. In any case of local support on Bitcoin, it will be that same level. That kind of, you can see the 60k demand kind of being eaten up every time it goes here. I suspect it's a big psychological level for not only us retail investors but institutions. You'd probably like to think that a lot of ETF holders want to see Bitcoin above 60k, and a lot of people have interest in it being above 60k, including miners at the moment. Which obviously, if you were able to read my piece dissecting what I see ahead for Bitcoin in the long term and on a high time frame, the minor capitulation was something I touched on in the hash ribbons indicator, which can really give you insight into how cyclically we've had different points in time where there's been minor drawdowns either due to price, transactional fees, the halvings with the rewards being halved, and more often than not we get a situation where they do capitulate and the older machines from years and years and years ago, older versions turn off, and this is what's called the minor capitulation. The hash rate kind of resets, and then obviously price breaks out and hash rate follows. So on and so forth. And really, in this last week, we've seen a drawdown in hash rate that was around, I think, 7.2%. Maybe Taylor can correct me on that. And really, this type of drawdown is likened to the exact drawdown that was I'll actually see if I can get a photo up, an image up of this, because I did have one, but it can be likened to the FTX drawdown. So I'm unsure if you guys can see that. I'm hoping you can. But that there, I'm just going to OBS to confirm that. Yeah, you can. So you can see here this Bitcoin network true hash rate drawdown was as much as the market bottom after FTX. Now think logically about how crazy that is in terms of minor capitulation, that we're having the same drawdown in hash rate as what we had when Bitcoin crashed from 17, 18k to 15k. Why? I'm not fully across it. Obviously, halving takes a fair bit of this. I don't know if a lot of miners turned on after the Runes protocol, which I've done a research report on recently that you can go and read. Obviously, my conclusion there is that Runes is very vaporware. It's very shit, to be honest. I think the transactions are down 80% from a week or two ago. So really, we're going to have to give that a miss for now and hope that DeFi and a true ecosystem on BTC can be built somewhere down the line. But I want to make a point of that. This is actually bullish. Soon enough, we'll see more miners even turn off, and then eventually price will just break out. We'll have a local bottom, and then miners will become insanely profitable again, and the hash rate will continue upwards and follow price as it does. But yeah, I thought I would mention that. If you want to go back and read my article, I highly suggest you do, particularly if you're kind of worried about Bitcoin or alts right now, because I suggest if a lot of you sit on Reddit or your YouTube or your Twitter, you all have probably favorite influencers you follow, and I'm sure half of them tell you that Bitcoin's going to $20,000. No, it's not. And you probably follow people, I hope he doesn't mind me mentioning this, but actually I won't mention his name. I had a client in the advanced trading course or the day trading course that used to kind of say in the general chat, this guy on Twitter said this, and this guy said this though, what do you think? And I had to kind of just show him the high time frame charts and say, what do you think? These guys are on there, they're paid to make engagement, they require more followers, they have to have a contrarian take. And then I think I showed him older tweets or tweets recently that had a completely different take. So yeah, be careful who you follow on there, don't take their word for the gospel, do your own research. That's the most important part, taking everyone's advice, whether it's mine or someone else's, or even the charts or the ideas, and actually deriving a conclusion yourself, because at the end of the day it's your own money. And yeah. But moving on from that, so we'll keep an eye on Bitcoin as price moves locally and then decide or create further action. We obviously had an equal buy recently in Pepe, which is slightly different. Equal, my explanation there was pretty clear about the Phantom ecosystem heading towards Sonic. Pepe is obviously a beta play to Ethereum. Now let's quickly take a look at Ethereum. It's had a big rejection from the range POC. I've been mentioning these POCs tirelessly on Bitcoin and Ethereum and how they're our greatest support and resistance flips. And I've been saying this for the past week, right? And then what do we have yesterday? We rally, we have a huge short squeeze to the cent. We reject from the range POC, and pretty much almost traded as much as $100 down on Coinbase and other charts that wicked. So, yeah, the idea here is the same on Bitcoin. Once we can claim this level, I feel like there's going to be a lot more confidence in the market, and you can begin to squeeze a lot of the liquidity that's higher up on both charts, which would be, tons of liquidity sitting on Ethereum up here, and same at range highs on Bitcoin. So what I wanted to do today was actually a bit different. Firstly, we'll take a look at Pepe, but understanding why I want to discuss Ethereum beta players in the Ethereum ecosystem. That's of course because I think on July 8th, which is in 6 days, this keeps getting pushed back weirdly. We have the launch of the Ethereum Spot ETF. Now, we're already nicely invested in Ethereum in the Trading Academy using a dollar cost averaging strategy throughout June to November of 2022. We bought it 1900, 1700, 1500, 1300, 1100, and 900. And I think the low for Ethereum this cycle was about $850. So we bought the cheapest Ethereum could have been this entire cycle just using a dollar cost averaging strategy, which I think yielded us a 1400 odd Ethereum average buy. Obviously, Ethereum's at 3,400 or whatever, so 4,200, let's call it. It's a 3x. I do expect Ethereum to get to 4,200 or 4,000 and beyond and make new all-time highs. But we need to be smart about what we can do with the hysteria and the hype that's going to be around Ethereum. Now, whether or not Ethereum is going to whatever price, it's definitely got the most conviction out of everything that is Ethereum. But you can begin to trickle a bit of capital elsewhere into what I like to call beta plays. Now, obviously, you've seen me use WIF as a beta play to Solana. You've seen me use Pepe recently. And what is a beta play? Well, beta play is essentially just the kind of higher return but higher risk play that exists kind of in the context of an ecosystem. So as I've said, with Pepe and whatnot, but they offer obviously more volatility and more risk, being that they're altcoins that are built on the ecosystem, but obviously that higher risk and higher volatility provides higher returns, which is what I'm going for. So I thought we'd use today to take a look at a couple of Ethereum ecosystem beta plays. So what can that be? So a very easy example actually is layer 2 solution. So we've been exposed to Polygon in the past in the service, which is Matic. Obviously we're holding a fair bit of Arbitrum as a layer 2, which we were pretty much up, over 50 units on, given that it rallied from as low as 75 cents where we bought through our a dollar cost averaging strategy, which is actually the all-time low for ARB that we caught. It's pretty much a 5 cents above that right now. I'm not going to sit here and explain why ARB has traded down that much, but essentially I'll probably be looking to de-risk a fair bit there once we get above our average buy. I'll be looking to put that into other ecosystem plays, but the TLDR on that is Base is pretty much overtaken, and as has Blast, so it's got two larger competitors as opposed to having not only just Optimism, Matic, and others, but two newer ones since. And really the market share has been shared, and then you add on the multi-tens of billions of token unlocks, which just got another one this month, that pretty much had its biggest one in March at the altcoin top, has just further fueled further downside and fear for loud Arbitrum investors. So yeah, that's an example of one. Other examples can be DEXs. So Uniswap is a DEX built on Ethereum. There's even ERC20 tokens that we're invested in that you might not know. Chainlink is one. Link was an ERC20 token that was built on there. There's non-fungible tokens, which are NFT marketplaces. So think of OpenSea as one, so on and so forth. But what I wanted to take a look at today was a rather different angle, and I was going to look at three projects that have either yield bearing or actually got reputable cash flow as a business. And what I mean, or as a blockchain and as a cryptocurrency. Now, you might ask me why. Well, the funny thing is with crypto is that majority of cryptocurrencies are vaporware. Most blockchains are rubbish. Most tokens and projects are good to make money on, but they're rubbish in the end of the day. We have millions of tokens created every day. How many of them are going to be around in 2 years? Less than 0.0001%. We've got tokens in this industry that have said they're going to be doing things for years and years and years, and they're down 90% from their 2017 all-time highs. XRP is one. So on and so forth. And so, I was having a real long, hard think about this Ethereum ETF. What is the sticking point of the Ethereum ETF? It's institutional investment into Ethereum. It is a pathway or an exchange-traded fund or exchange-traded product that allows readily and available investment into Ethereum by trading a vehicle that tracks the price of it. So if a lot more attention is going to come to Ethereum in terms of institutional investors, will they look elsewhere? Most likely. Now, as an institutional investor or a traditional investor, what do they usually look for in stocks? Well, utility and the fundamental bullish reasons behind it. And really, it's that stock or that business makes a profit, makes a revenue. Actually has a good business model. So are there Ethereum projects out there that are beta plays that are higher risk and higher return, but, and have this correlation with Ethereum, but are actually making money? That I'm actually making annual revenue that they're printing on a balance sheet where an institutional investor can look at and go, wow, I want to invest in this company on Ethereum because Ethereum's going to do X and I believe this will do Y. Oh, okay, it makes a profit every year. It has employees. It does this and that. Well, there are a couple that we can look at that have a direct correlation with Ethereum. And really, that's what I wanted to look at today. And really, I can get questions on them. I haven't actually looked at the questions, so no, Willie K. He just likes Link. Good on you, Willie K. Hey, Craig, how you going? He's speaking Spanish to me, I think. I think that's Spanish, Craig. I'm not 100% sure. But we'd take a look at a couple of these projects. We'll take a look at the charts. Now, I actually haven't looked at the charts of any of these. But the first one I'm going to talk about is Lido, or Lido. I'm fairly sure it's Lido. Then the Lido DAO. Now, for those that haven't heard of Lido, I'm pretty sure you would have, given how big staking is around Ethereum, and that Ethereum is now a proof of stake network. But essentially, Lido is its name. It's a DAO. It's a decentralized autonomous organization that essentially provides a liquid staking service for Ethereum now that's moved to Ethereum 2.0 and that now that it is proof of stake. So it's part of the Ethereum ecosystem, as I mentioned, but it also supports other proof of stake blockchains such as Solana and a few others. But essentially what it is it's a significant innovation in kind of staking landscape, and it offers a user-friendly, liquid and secure way to participate in staking. Now, going back to what I was saying kind of about, and we will get this chart up, about what is an institutional investor looking for on Ethereum? Lido DAO. I do already have it here. What are they looking for? Well, they're looking for cash flow and they're looking for revenue. Now, as a staking service, how does Lido do that? Well, it earns it primarily through those staking fees. So you get rewards, obviously, for users that stake their tokens via the platform. I think back in the day they used to charge a 10% fee. I'm not too sure. I'm not too sure what that figure is now. But 10%, and this allows them to have an operating cash flow where, I might actually look up quickly Lido DAO. Oh shit. Yearly revenue reports. Here we go. Actually, well, I'm just taking a look at the Dune dashboard. These are usually really good to look at. Protocol economic reports. Price alley. Gross surplus for month. So I think this is in Ethereum. But yeah, see it's STF. So that's what you get when you stake. Obviously, they take a percentage of that. But okay, here we go. So we found their gross surplus annualized protocol economics. So per year they earn 55 million 4.8 million per month, which is 1,347 ETH they're earning. So this is the type of stuff you want to find when you're looking at fundamentally investing in a project. You have to think past just what you're looking for. What is your marginal buyer looking for? So what are we trying to determine here? I'm trying to determine who our marginal buyer will be. Okay, it's institutions and it's traditional finance investors that are looking at Ethereum as a blockchain and as an ecosystem for the first time. What type of projects will they most likely find themselves liking? Okay, the ones that actually are earning a revenue, that have stable cash flow, that have solid balance sheets, have solid income statements. They can go to Lido and see that it's pretty much not a risk-free, but a pretty nice platform that's been around since 2021. It aids in the staking and the movement of Ethereum to proof of stake. There's currently no available ready staking options in those ETFs. Okay, well, Lido's a great place to go. Not everyone can stake Ethereum via their ETFs. So let's take a look at this project. So you can see that they're earning 55 million per year. Okay, this might be kind of a good project to look into. Does anyone kind of have any questions or any comments on Lido? Is anyone an investor of it that's watching? I've got 15 or so of us here now. Um, or has any comments around it, or even really anything I've said regarding how they feel about what I'm talking about in terms of where institutional investors will go, or maybe traditional finance, or even just beta players in general. Do you guys have a differing opinion? Will they'll just go for memes, everyone, or you think it might be best to get exposure a little bit everywhere? And just a reminder, you can make this kind of a whole investment, and we can look at it that way. We've got the most of our units in the Ethereum ecosystem on Ethereum. We'll reduce our ones on R, but we've then got a very solid layer 2 investment. We've then got an ERC20 token investment. Well, we've actually got tens of them. We've got Hilo, Prime, Chainlink. They're all ERC20 tokens. And then what about those protocols that have cash flow? Okay, let's look at Lido. Let's look at others. I haven't seen, no one's made any comments yet, so maybe no one has any comments. But anyways, we'll continue going. But I think Lido is definitely one we should all look into as an investment. I was hoping people had questions and comments around this, but I'll just keep going. We'll take a quick look at the chart. The chart was very, very weird. I haven't actually looked into why on the weekend or last Friday it dumped from as high as $2.40. So that's a 25%, negative 25% daily dump. Um, but let's quickly take a look at this chart. I've never charted Lido before in my life. There's obviously a very persistent downtrend that's been occurring since. Okay, so it rallied really hard on the ETF. That's what I noticed about that date. Is that from the bottom of the market in October, so $1.40, to $4 up here at the ETF approval. Pretty confusing. I might have to look into what that means a bit more, but there is obviously a very clear kind of downtrend developing here. The market structure looks kind of odd. I expect that the beta play price action would be very whipsaw-like around this FETF. But in any case, so it's obviously invented after proof of stake. But really, this is kind of when price started to break out. We're pretty much getting it only 50 cents more expensive than bear market lows. And you consider these bear market lows and these bear market lows, even though Lido did exist back here. But throughout the start of 2023 was when the market was at absolute bottom. So, we're getting it fairly cheap. I don't know if this is one that people would be interested in buying comparatively with other ones. I think the staking idea is good, and it's really good to see their cash flow. But I do think there are slightly better ones. This is just my initial look at it. The chart doesn't look great, to be honest, but neither does any other chart really. Even if we go from that Pico low in 2022. Yeah, so it's made pretty much perfect 786 retracements since that low towards the end of November at the bottom of the market. We'll just see where this major golden pocket sits. Yeah, it's pretty clean price action, isn't it? It's kind of trying to reclaim it now, but I wouldn't suspect it. This doesn't really give me any further confidence in price action currently. Take a quick look at where this POC sits as well. not too relevant. Anyways, that's one I'll keep an eye on, and we can discuss further. I can get rid of Ocean now that that's merged with our lovely FET, which is hopefully not still dumping. No, it's up a fair bit today. Um, any case, let's move on to the next beta play. Um, but what I essentially will be looking for there is probably, in terms of Lido, is a more deep dive into their treasury. What do they do with this revenue? Um, and that is this revenue model a model that can sustain into years to come? You know, we just looked at, well, we didn't look at it, but I saw stuff on Polkadot, a prior holding of ours this morning, and their treasury management just seemed horrible, paying all these influencers and stuff. So, yeah, I think what you want to see here is further integration into DeFi platforms as DeFi and the altcoin market heats up, and keeping an eye on that treasury management. But Lido seems like a pretty solid beta play for me. Just looking at it from the outset. Another one is Maker, MKR. I get that one up as well. We'll look at the Coinbase because Americans are scrubs. Somewhat a pretty similar chart to Lido. So some of these beta plays are, well, Maker has really launched and then went against the tide. Not so much. But still from those Pico March tops in the altcoin market, we're still down negative 37%. So you're still getting a cheaper than in March, and I tell you what, everyone was pretty bullish in March, and you've got a confirmed Ethereum ETF. I'm gonna quickly see what this pivot looks like. Yeah, so we're perfectly catching. It seems like it's pretty clear from two different Fibonacci retracement perspectives here for me. I will just check if there's any confluence with our POC for 2024. Not really, but we are seeing a very clean tap of that POC there. So I would definitely make note of that on this chart. Well, at least you guys get to see how I chart. So whenever I do a POC, I add a horizontal ray to kind of mark out the rest of the chart because it only goes to the current price action. So really, it's pretty clean. This chart looks a lot better than the Lido one. But obviously we've got a pretty steep downtrend, but obviously three key areas to the downside that I'll be looking at if we continue to reject would be the golden pocket. You can obviously see how important this horizontal price action is in holding support. If we did wick down, I would expect it to be pretty cleanly to this POC and then see a reaction with all the buyers stepping up from here. You can see how much more volume exists in this kind of demand zone. And this is how I map out my demand zones for DCA. Where is everyone else buying? Well, everyone else was buying around here. So, in saying that, we can probably say that this is a fairly good accumulation DCA zone between 2,200 and 1,800. I will just make that note if we ever come back to it. DCA zone. But you can see we've had a pretty clean. Well, yet to have our 786 retracement, which most alts have. So just keep in mind that that retracement can come if the market sees further south downside. And I would consider this 1200 level, bottom support. I will just see where I do that. I do that pivot from there. See what it looks like from our bear market lows, and then you can see the confluence here. So two different major pivots. A 2024, kind of yearly open pivot. Then our bear market all-time lows pivot. This is from mid 2023. I've got OCD, so I need that to perfectly align, and you can see now the 786 perfectly aligns with all of these lows throughout late 2023 before we rallied, and the major golden pocket was that perfect wick, and now aligns with this more local 786 and our DCA zone, so I would suspect that 618 is just as important. But that's just looking at the chart. I will just check if there are any questions. I missed it of turn to buy away now is a similar buy, and yeah, nice one, Taylor. Seems like a lot of Cadena enthusiasts here. Anyone want to give me a reason as to why? You guys got miners. I know Tom asked last week. Willie, are you a Cadena miner? Do you hold it on spot? Do you guys like accumulating. Apologies, Sam. Um, that's part of our DeFi course, yield farming, benefits, risks. I probably won't have time just because this is a trading academy. I don't want to spend 10 to 15 minutes explaining something that's not relevant to most people. But Sam, if you want to message me on Discord after, I might not. Okay, you guys are miners. I mean, I love how we're going completely off topic here. I was asked if you had any questions around what I'm talking about, Ethereum beta plays and the ETF, but we'll get to KDA at the end. I will just complete what I'm talking about. Um, So what is Maker? Obviously the chart looks really, really, really clean. But Maker is also a DAO. It's a smart contract platform that aims to create stability and transparency. But it's best known for its role in creating and maintaining DAI, which obviously everyone knows is a decentralized, collateralized backed stablecoin, whose value is obviously pegged to the US dollar. It's a US dollar stablecoin. But it seeks to do a number of things. It's mainly a player in decentralized finance, enabling collateralized debt positions, implementing governance mechanisms, stabilizing volatility, etc., etc. It has two primary tokens. Obviously, this is Maker, and then it has DAI, the stablecoin. Maker is the governance token, so like Arbitrum, it's the governance token there for the DAO. It's deflationary. It's burned when stability fees are paid in DAI, and then it reduces its total supply over time. So it has a burning mechanism to make sure that it's deflationary, not inflationary, just constantly adding supply to the market all the time. So on and so forth. So how does that actually earn its revenue like Lido? Through stability fees, once again, on the DAI generated via collateralized debt, liquidation penalties from under collateralized vaults, and mechanisms that maintain the value and demand for both DAI and Maker. So it's a pretty good business model off the bat, like I said. If we go, I will see if I see Dune dashboard, Maker, MKR, uh, cash flow. We'll just see. I'm not 100% sure if they've got a similar one to Lido. Market price. So they've got over 5 billion in assets collateralized at the moment. Surplus buffer. I'm not too sure what that is. Recurring revenues. So 230 million in recurring revenues. But here's their balance sheet. You see, this is the detail you can go into, and what I would suggest, this is what traditional finance investors will do and institutions will do. But you can see their assets here. So obviously in 2021, peak of the market, they almost had 10 billion. They've got about half of that now. Very solid P&L, trading revenues. Okay, so they used to have some form of trading revenues. Okay, so I think Maker's actually losing money. So this is one that I've looked into. I haven't looked at this at all yet. So I need to probably go into these financials a bit more specifically, but I think they're losing $4 million per year so far. I might have to look at what their operating expenses are. I assume this would be potentially marketing and other things, maybe paying employee expenses as well. But I think it's probably it's going to come down to this and this. Their profitable years is when their interest revenues have been huge. So it would probably be going down the path of deep diving how much interest they're going to earn on, obviously that over collateralized debt, DAI, staking mechanisms and whatnot, and figuring out, once the ETF launches, once this altcoin market is heating up, is this going to be a protocol that starts making as much as 14 million in interest revenues as opposed to 200,000? Definitely something to look into, but from plain sight, I think I prefer Lido fundamentally. And at least looking at those financials, it looked a lot more sound. I'm not sure if I'm misinterpreting the Maker ones. Maybe someone can comment if they know. But this chart looks so much better than the other one. Has very clearly defined technical analysis levels that we can identify as resistance, as demand, as supply, and begin to map out, where possible. Right there already is a pretty clean level of resistance that I would say would be those first highs that we tap. Um, that align with this 618. It's always a battle of golden pockets, don't you worry. So I would, realize that as a resistance, but I definitely think this is one we should look into from a technical analysis, maybe even a trading perspective, as opposed to an investing. But something to keep in mind. And the last one I was going to quickly look at is the Ethereum name service, or ENS, which I reckon most of you probably heard, if you're on crypto Twitter, there's no way you couldn't have not seen this. Never looked at the chart in my life, never invested in it. Have seen it a fair bit. Um, this has got a bit of a different chart to the other ones. This one's getting front run ahead of um, the Ethereum ETF fairly hard. So ENS at the last bull market, let's call it, had an all-time high. Let's mark that out, of 84. Got my magnet so it's accurate. 84 and 2 cents. No, it traded pretty much sideways for majority of the bear market accumulation. I will just see where these major fibs line up. It's 382. I'm just going to mark that out as that represents the underside of this kind of SR flip, doesn't it? You can almost call this the entirety of the bear market range. Yeah, that's December 2021. So I'm just gonna bear market range, and really it's under that 382. But the chart is very weird on this. There's not much we can map out really technically to help us figure out, because I will just double check. Would have been launched on Binance after Coinbase is my best guess. Pretty similar time. Maybe it did launch in late 2021. Well, Binance all-time high is $40 higher than the Coinbase one. The bloody Binance degens. I will just quickly check. I think there's nothing I need to. Yes, good question, Kush. Yes, you will need to will need to change over Ocean and Singularity. Where do you hold those? As that's where it's kind of dependent on. There's a number of exchanges. So that was the whole Coinbase thing, why it was annoying, because Coinbase just came out and said we're not supporting this change, so you'll have to change your tokens yourself. Whereas Binance and several other exchanges said we'll do it for you. It'll just automatically happen. But I mean, we might as well quickly. Imperial Wealth. As I go on the update, I just don't know it fully off the top of my head. I feel like I've gone well off topic here, but we'll just quickly show you this because you don't have to wait that much longer. I haven't fully looked into what to do for Ocean and Singularity because I don't hold them. But if you go to fetch, and you probably look here, so you got a few more updates to go. ASI, no calculations, started with FET, total supply. FET holders don't do anything right now. Special FET, we're FET on exchange, relabeled. I'm not 100% sure. I do feel like in my today's update, I may have phase on doing merger to FET, which is currently ML FET trading continues. The migration platform was also open to Singularity DApp. So I guess there's one way is going to the Singularity DAO DApp, and this facilitates the conversion of AGIX and Ocean tokens to FET tokens. So I suggest that's what you should do, is go to the Singularity DAO app and do it that way. If not, it should automatically be done if you've holding them on centralized exchanges. So hopefully that happens. Ethereum name service, Dune dashboard, cash flow. I'll just go back to this chart, but I don't think this chart is really going to tell us much. We're exiting. Actually, we can look at it locally from a bear market range perspective. Let's just go back to this. Sorry. This has no significance to me, I feel. And if we just mark out the top of the bear market range, you can see, multiple times of kind of. We'll just see if this pivot here. And we rejected. We've rejected 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 different times in this bear market range. Now, seeking to break out and kind of undercut this kind of SR flip. I consider this an SR flip along here, this 36 level, to kind of get into somewhat price discovery, because if you look above, there's no real structural resistance in this chart. It only exists from this point here. It's not like we've got years and years of price action like Ethereum and Bitcoin. But this chart is crazy in the sense that people are front running it for, 2 weeks ago, $18. It's almost done to 2x. But this is seriously something we should look into. And the reason why is because the Ethereum name service is essentially just a decentralized open source naming naming system built on the blockchain. So you'll probably see a lot of people do .eth in their name, or they register domains under this ENS. And really what ENS is kind of used for is matching or mapping human readable names, like, so say it's bear market range.eth to machine readable identifiers such as Ethereum addresses, content hashes, and metadata. So really, it's putting the block. Really, it's the heart of Web3 and blockchain. So essentially, all it does is it kind of leverages Ethereum smart contracts to manage the registration and resolution of domain names by matching them up. So it's pretty cool technology. One that, if ETH does get a lot of inflow and a lot of traditional investment, this could definitely be one that sees a lot of love. We're obviously getting pretty nice price action from the bottom of the market in October 2023, which is seen, as much as a 5x more, 4x, 5x. So this could be one that highly interests me. Let's take a look at their business, cash flow. Okay, staked F themselves. Oh, sorry, this is Lido again. What have I done? I was about to say they got similar to Lido. This is ETH dashboard. This didn't give me Ethereum name service. ENS Dune. Monthly primary name. So there's been 800,000 names, 2 million total names. So monthly registration, this should be, okay, that's going down at the moment. Monthly primary name. So the peak rate's in March. Peaks are all in March. So top of the, I'm ignoring prior market. March, 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 top of the altcoin market. Avatar record growth, daily summary, ENS users down, market share, ENS down. Hmm. Financials. Let's quickly take a look at this. We'll just see if there's any. Alrighty, I don't think got any luck on ENS. Um, I'm sure if this will 100% be right either. Yeah, maybe they've cooked their things, but I'll look into this for us. But once again, it's pretty similar to Lido and Maker in that you're looking to see how much monthly and annual revenue ENS can make, putting yourself in the thinker or of the mind of a traditional and institutional investor. What do they want to see? They want to see monthly annualized revenue and profit coming into a business that's going to be able to sustain beyond 2 to 3 years of crypto vaporware and whatnot. The conclusion here for me is that all three look like pretty good investments. I prefer Lido and ENS fundamentally. I think Maker has the most structural chart, but ENS has the most bullish chart. So I'm going to go, I just wanted to run, this is the first time I've run through all three projects today on this type of scale. It's the first time I've honestly looked at all three charts, first time I've looked at their financials. All I had was kind of a mini write-up of what the projects were. Um, uh, and wanted to kind of just run through it with you guys, what I do kind of live to see and understand different metrics, cash flow, um, putting myself in the mind of the marginal buyer. Now moving forward, we've obviously got the Ethereum ETF launch on July the 8th. I'll be seeking to invest in a few of these. I'm going to look into a few more of these. We've obviously already got Pepe, Chainlink Prime, ERC20 tokens at layer 2. And now I want to kind of look at these traditional finance ones that have money, have stable revenue, have stable profit, have cash flow, have balance sheets, and hopefully we can hit 1 to 2 good ones that get a ton of traditional finance investment into them because they're structural businesses that run a profit. So what I will do to finish off is look at the great Kadena. So we have, whilst I do look at Kadena, for the people that are here, do any of you have any questions regarding what I've gone through? Do you have any comments about which projects look better? Uh, which ones look shit? If you know anything on the projects, say it. Kadena. KDA. Wow. Pretty interesting chart, won't lie. Yeah, I thought it would be around there. Um, this chart is no different to 99% of other altcoin charts, lads. Just to first off, we've got the March top, which is the Bitcoin ATH, altcoin ATH, Ethereum ATH, oh, sorry, not ATH, local yearly all-time highs in 2024 happened March. Now, your coin should be down roughly 70%. But so for instance, another coin of ours that we hold that I can show you has the exact same chart. Uh, so literally June, March top, it's traded all the way down to its 886 where I consider the 886 the reversal DCA zones of complete moves because literally it's almost moved to 80-90% of its drawdown. You don't have any, if you believe in the project, the risk to reward of investing when it's locally 90% down from a high is probably worth your investment, right? Without saying it. So 886s are always good Fibonacci reversal points. Doesn't mean that it just reverses. If the market trades down, then we'll probably see PIR around $2, $2.60 where we bought in the bear market. And going back to Cadena, it's a very similar situation where right now it's failing to reclaim its major 886. So what I mean is here is we've traded below it. We've come up probably 10 times since we've come down here, rejected a reclaim of it. And really, it's just the same as any other altcoin at the moment. And why I said on high time frames, this is it for the market. We either reclaim everything on all alts, major levels, and head back upwards, or we fail and we reject on these reclaims, Bitcoin falls and adds to alts. And I don't know what the bear market low of Cadena was. It was 40 cents. We're not far off it, right? It can go lower to 33. Probably something I would be aware of. But, I don't really have too many comments for you guys other than it is what it is. Like, this is just how every altcoin is traded. This isn't different. Like, some have come down less, 50 to 60%, but majority are 50 to 90% down. This is a great area to dollar cost average, accumulate more purely from an R to R perspective. Now, that's a risk to return perspective, given that Cadena's all-time high is as high as, my lord, I don't know if this is a glitch, but $88 on a given day. I would suspect that's a glitch. Let's just call the all-time high 27 bucks. So that's over 50x away. So even if you had, a measured calculation that it'll reach what it reached in 2021, unsure if it will. I don't think Cadena will. I'm not saying it won't, but yeah, that's your risk to reward you got. Even if it was to reach its March high, that's still an 8x from here. So your risk to reward of just even seeing the price back in March is that, alright, well, I can buy or accumulate more here and say your invalidation is bear market lows of 2023. Well, that 58 cents to 41 cents is only a 30% drop. So what I'm saying here is, let's just say your invalidation of investing in it is these bear market lows. If you were to buy Cadena here and begin accumulating more of it, you have the idea that, okay, I'm accumulating, alright, we've rejected, okay, BTC's rejected, I'm going to cut my position, and the worst you can be is 30% down. On the flip side, sorry, what did I say before? 8x, that's not right. 4x is what I meant. Your downside risk is 30%, your upside risk return is 4x, just to 3 months ago. So I find it such a peculiar point in the market right now. It's not just Cadena, it's all altcoins are faced with that perspective that they have people that believe in them, X, Y, and Z reasons that could trade them for 4 to 10x to March prices, but they're not willing to buy them here because they're a bit scared. It's It's why I kind of do those podcasts and the updates on altcoins to kind of get you to have that broadened view of what the potential is on the return versus the downside risk, which isn't really all that too much from here. But in any case, obviously, that's not financial advice, and you need to really do your own research, both on the charts and fundamentally. It's kind of why I did this exercise with you guys today, to look at fresh charts, look at fresh Dune dashboards, look at fresh projects, so you guys could get a better idea of how you can actually approach this yourself. So right now, if I was mining Cadena, I was very keen in knowing it, I would go get this chart, understand that, okay, we've made 886 move, research what Fibonacci's are if you want. If you need to do trading course, get in touch with me. But understanding we've done 88.6% of this entire move from the bear market lows. Alrighty, well, my return to upside in just March, not altcoin peak, not market peak, is a 4x. My downside risk probably presents as 30 to 50% maximum. Okay, I should probably accumulate more if I have true belief in what Cadena can do in the future. If not, I can cut my losses and reassess. Does that all make sense, Tom and Will? I realize that I'm probably not waiting long enough for questions because I think this live stream, I don't know if it's 30 seconds behind, 2 minutes behind. Actually, I'll go on the live stream and see. Okay, we're about 30 seconds behind. I just heard myself ask you guys if that makes sense. So we'll sit here. Um, And just on that, boys, I don't really look at Cadena that much. I have looked into it a few times for a couple of my advanced trading course members as they were similar to you guys. They had mined KDA for years or whatever and just want to know upside price action. I would go take a look at the fundamentals on KDA, but just from a plain and simple technical perspective, it's done what every other altcoin does. Don't panic. I would see this as realizing it for what it is, that the upside return from here is huge. The downside risk for me on KDA is limited. Now, even going to CoinMarketCap, I'll quickly look at the Cadena. Because even around here, right, like, yes, people do it. So it's got a almost $200 million market cap. I mean, I don't know too much of KDA, so I can't comment, but also understand from that perspective. How many sellers are honestly left in KDA in 2024? It's really reaching all-time lows, so take it for what it will. I think it's in an alright position to return from here, and I would literally just use this area, this 886, to bear market lows as my accumulation and dollar cost averaging range. And if KDA decides it's vaporware and it sucks and it's never going to exist, or Bitcoin dumps or whatever, you can, I guess, cut your losses here because it's not that much of a loss compared to the upside return. Anyways, thank you everyone for attending. It feels like I don't get through much of what I want to get through in the hour. I did kind of speed through it. I didn't fully explain what the projects were to the best of my ability, but hopefully they made sense. Looking at the charts made sense. Looking at the Dune dashboard analytics made sense. How you can get a sense of how I'm trying to envision and picture who the marginal buyer will be for the bags that we want to invest in. Obviously, really thinking into the ETF. I've exposed to Pepe, we're exposed to some ERC20 tokens, we're exposed to some L2s, but we're not exposed to those real institutional traditional finance players in which it's a blockchain or a project that is turning over an annual profit. I think I found two here that do and one that didn't, but they're the type of analytics and that's the type of fundamental information you can look into before making an investment into a cryptocurrency project, much like you're a traditional finance investor. And hey, maybe that'll help you figure out who your marginal buyer will be, pretending to be that person. So from here on those projects in the coming week, I'll be looking into all three of those more as we approach the FETF. And then decide from there whether there's more exposure for us to be had to any further Ethereum beta players as a result of that ETF and the institutional and traditional finance investment that will come to the ecosystem. But that'll be it for now. Thanks everyone. If we've got any last questions, I will just wait 30 seconds past here, or a minute past here, just to see if anyone's got any final charts or questions or things they need answers. Kushaharan, I hope you heard what I said about Ocean and AGIX. You're on the Singularity DAO app, and then we'll do it for you. if they're on major exchanges, bar Coinbase. It'll do it for you as well. Um, but I don't think there are any questions coming in currently, and no one wants me to touch on anything more. So I guess that should be it for today's live stream. I think we had between 10 to 15 again. Most of the time, it's obviously not a large proportion of everyone, but it's good to see that there's the same people coming and wanting to learn and hear what I've got to say. So that's good. And we'll see everyone next week. I'll get in touch in the Discord about what the live stream will be on. Obviously, I kind of want to do it around what you guys want it to be, which is questions, queries, charts, but no one's kind of sending them in, so I'll have a think. And we'll get to that next week. But thanks everyone for attending again. I really appreciate those that do come. And we'll speak in the Discord next week. Cheers.